Let's get talking about D-Mart or Avenue Supermarts. Now, that's in focus on the back of a brokerage update. The stock has surged close to about 3%. We've got Mangalam joining in. Mangalam, it's Motilal Oswal, which has upgraded D-Mart. Can you tell us their rationale?
Well, yes, Motilal Oswal has upgraded D-Mart, but the bigger point is that D-Mart's now back in fashion after this upgrade. Perhaps that's the trigger that the street needed, because if you just take a look at it, Motilal Oswal targets the SSSG for the company, the same store sales growth, to improve from FY24, and they say that moderating valuations provide a decent entry point. So let's take a look back at D-Mart's journey. I mean, when it started to, when it listed to, for the next 3 years thereafter, it rallied about 7 times, and thereafter, for the next 3 years, it did practically nothing. It's down about 21% in the last 3 years, and from the record high itself, it's down about 32%. But that's about the stock performance. Fundamentally, in the last 3 years or so, the company's added almost 150 stores post-pandemic. That's nearly more than 50% of their overall store strength. And as a result of which, the revenues of the company too, pre-pandemic, were close to around 25,000 odd crores. Then was a mild dip on account of the pandemic. And now, as of the last financial year, they've almost doubled, close to around 42,300 crores, 42,850 crores on the top line itself. And this is important mainly because 50% of their stores were added in the last 3 to 4 years. And Motilal Oswal says that the newer stores which are added, which are larger, will continue to grow in peak beyond the 3 to 4 years mark as well. And that's what gives them a rationale as well. While the newer stores are larger, they've had a bearing on a couple of factors. One, the sales per square feet has come down from pre-pandemic levels, and secondly, higher inflation has reduced the contribution coming in from general merchandise and apparel, so that has impacted their gross margins. But despite that, D-Mart's EBITDA margins are stable at around 8.5 odd %, and they've scaled up D-Mart Ready, which is their e-commerce business as well, to a quarterly run rate of almost 250 odd crores. As far as the valuations are concerned, pre-pandemic, the 5-year average was close to around 60 times EV to EBITDA. Currently, after the correction, is 36 times, and Motilal Oswal believes that the fair value would be around 40 times itself. So the key to track would be recovery in same-store sales growth, improvement in their revenue mix, scaling up of their e-commerce business, and the optionality that they've brought their pharmaceutical or a pharmaceutical business in the D-Mart stores as well is something that we'll be watching out for. Any recovery, late recovery in growth and increased competition from larger e-com and modern retail players could delay the up move that we'll see in perhaps D-Mart.
Okay, all right, Mangalam, thanks very